It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Welcome to Search for Ease, the weekly newsletter from Aadhar Bonds. I am Arjun Patsati, and in this week's Search for Ease, we will cover all the bond market perspectives of the upcoming Navi Finserv public debt issue. Just give you a brief of the issue. Navi Finserv is coming out with a public debt issue on 23rd of May, which opens on 23rd of May. The issue size is rupees 300 crores with the option to retain oversubscription of rupees 300 crores. So totally rupees 600 crores of the total issue size. And the returns to the investor for 18 months would be around 9.49% for the 18 months, which has a monthly and annual coupon option. And for the 27 months, it's around 9.79%, which has a monthly and an annual token option. Now let's compare this to what is available in the market. So clearly it is 3%, 3% over the government bond yield. What is the a similar maturity government bond is offering. And it is maybe 2.5% over 2.5% plus what the AAA corporate bond would be offering. So clearly, it is offering much higher yields than what investors can get in similar bonds. And mutual fund products that invest in such bonds also would be giving around similar returns. So this particular bond will give you 2 to 2.5%, 2.5% plus 2%, 2.5% over the any kind of a mutual fund return. If you go down the rating, that is Navi Finserv is rated A, and the other A-rated bonds, depending on the issuer and many other factors, be trading in a wide range between say 9% to uh, over 10% levels, depending on the issuer, like I said. So Navi Finserv, in that sense, is comparable to what bonds are trading around its rating category. It's also given that its rating is A, it's also giving the risk premium over the higher rated bonds, like any bonds rated over A. So for that, investors are getting a risk premium over the bonds. Now let us look at how Navi Finserv bonds have traded over the last 1 year. They have been pretty stable trading. That's not been too volatile. The bonds have traded largely in a range of around 8.6 to 8.8% at the lower level, and maybe around 9.25% to 9.35, 9.4% at the higher level. So clearly the levels have been, and this is across the maturities. Most of the bonds are issued in a 1.5 to 2 year kind of a maturity bonds. So depending on the maturity, the bonds have been traded. So the trading has been pretty much stable. Navi Finserv bonds mostly, I think to a very, very large extent, almost 100%, I would suspect, be taken up by non-institutional investors. So investors such as mutual funds or insurance companies would not be investing in such bonds because it's A-rated and it has lower liquidity for institutions. So it's largely taken up by the retail market. Now, if you look at the issues, that the private placement issues of Navi Finserv, they have issued a lot of bonds in the last couple of years. Like I said, most of them are over 15 months, 2 years, maybe slightly longer. A lot of MLDs, marketing debentures, because these are found a lot of favor with the very ultra high net worth investors because of perceived tax arbitrage. And the coupon rates have been in a range largely over 9%, over 9%, going up to maybe 960 maximum we have seen. And if you look at the redemptions that are coming up in 2023, there are about 600 crores of redemption bonds outstanding, which has to be redeemed by the company. And in 2024, there will be very heavy, which is rupees 2,400 crores of redemptions. Clearly, most of the issuance have been in the last year, 2021 or 22, where a lot of bonds have been issued with 2024 as maturity. And this has really punched up redemptions in 2024. So these are all the market perspectives. If you take the government bond yield, the government 10-year GSEC yield, if it's a benchmark, has moved from low of 5.85% to or 6% to 7.5% now, around 7.35% today, over the last 2 years. So it's been very volatile. The 1 and 2 year government bond yield has again moved very sharply higher, maybe from below 4.5% to 6.35%. And but in that sense, Navi Finserv bonds have been pretty much stable, trading at closer to over 9% levels, but around there and not too volatile. In that sense, investors are seem to have been protected from volatility in the government bond yields. And that's largely because of the high yields the bonds are offering, which is much higher than what the government bond, near AAA bond is offering, with ultra low rates at that point of time. And RBI had kept rates at very low uh, levels before the rate hike this month. Navi Finserv was issuing at higher rates, and that has protected the bond yields from being too volatile. Liquidity, on that sense, if investors want to sell the bonds, again, it's a retail market, so it's institutions are not participating in Navi Finserv bonds, the secondary market, and hence liquidity may be difficult to find, but it can be found at a price. But given that the bonds have been largely stable, to some extent, investors can be protected. So that is the market perspective of the Navi Finserv bonds. And this would how does it help financial advisors and investors to take an investment decision? It gives them a sense of what the market is believing in Navi Finserv. So clearly, there has been a good amount of investment interest by retail investors and ultra high net worth investors, which shows that many investors do have confidence in the company. Bond yields have been pretty stable, so which means that the company has been um, able to give a return that is commensurate with the risk of the rating, and markets have not really tried to. That means the rating, the risk has been pretty much stable at the market perceived level. It could rise, we don't know, but could fall also. But at this point of time, the market is pretty much comfortable with a stable kind of a risk on this bond. And the third is that at these levels, which is still well over the government bond yield and the public bond yield, about 3%, 2.5% definitely, then is the risk worth, is the risk uh, in a rising interest rate scenario on Navi Finserv bonds worth it than than the other uh, higher safety bonds available for a higher yield? Is the risk worth it? Now we have not seen a sustained rising interest rate scenario for Navi Finserv bonds, so that the market. So if the RBI continues to hike rates for a while, and if there is a lot of risk aversion that is happening in the markets, how will the Navi Finserv bonds react? That is some question mark. So we have to wait and see how the market reacts to that. So with these in mind, then investors can and financial advisors can take a decision on whether to invest in Navi Finserv bonds, the public debt issue, or not. Do not forget to attend our webinar on Friday, 11 a.m. the 20th of May on Navi Finserv bonds, which will give you all the factors that you need to know, the tools that you need to know in terms of knowledge to take an investment decision on Navi Finserv bonds. Thank you very much for listening in. Do not forget to download our app, QuickInvest Buy and on bonds. We curate a list of bonds for advisors and investors alike to select for their clients or invest directly with the most information. If you want to see the INR bonds risk code or proprietary risk code, which it doesn't matter about, which is rating agnostic, and gives you a very, very fair picture of what kind of rating, risk rating the bond is carrying. Because we take into account all sorts of factors from micro to macro and market. For the risk model, if you want to see that, just download the app and check Navi Finserv bonds out for the rating. Thank you very much for listening.